Hey guys, what's going on? My name is Zevi. I'm an owner of a company called Loanbrook, and we originate both residential and commercial loans. In today's video, I wanted to talk to you as someone who might be interested in becoming either a residential or a commercial loan officer, and which one of those would be better specifically for you. Now, mind you, the reason I'm doing this video is because it's May of 2024. And there is a difference in demand between where we were a few years ago to where we are today. What is a more profitable move for you in terms of a career move, all right? And that's the premise of today's video. So if you're trying to capture that information, you're watching the right video. And with that, let's get started, all right? So residential versus commercial. I want to start from the top. And I think this is the most important thing. And a lot of people miss it. And you really have to factor in demand in everything that you do, whether it's lending or any other business, right? And so let's take a close look at it. We're in 2024, mind you, where residential interest rates are hovering around 7%. Now, not that that's bad, but a lot of people over the past several years, right, between 2020 to 2022 specifically, locked in a rate somewhere along the lines of 2 to 3, maybe 4%. So when you're trying to figure out demand in today's market, in a healthy market, I would say that there's probably a 60-40 or maybe a 70-30 ratio to purchase versus refinance. Refinance being the 60 or the 70%. Well, that's out the door today, which means you're only really left with that 30% buyer's market. And of those, maybe half of those people are still considering whether interest rates are going to go up or down, or whether the market's going to go up or down. So there's a lot less demand, in my personal opinion, in residential lending today than there is in commercial. And let me explain to you why. Because unlike residential lending, where you actually lock in an interest rate for, say, 30 years, and I'm just going to make a note of that, most commercial lending is broken up into either 3, 5, 7, and in some interesting cases, 10 years. Now, here's the deal. These periods tend to be fixed, whereas the amortization schedule is broken down over 25 years as opposed to 30 years. Don't get confused. This loan is actually locked in for 30 years, right? Most residential loans. Whereas commercial loans have a fixed period of 3, 5, 7, maybe 10 years. And then typically, the owners need to refinance whether they like the market or they don't like the market, referring to the interest rate. The second option that they have would be to sell the property. So imagine that. This person doesn't need to refinance. This person doesn't have a choice. Otherwise, they're going to have to sell the property. So there is more demand in this bucket today than there is in this bucket just for this particular reason, all right? So that was number one on our list. Let's look at number two, which is licensing. Now, to be able to originate residential loans, you have to have a safe license, an NMLS license, because you're dealing with homeowners and you got to stay compliant. Whereas commercial loans are basically a business loan. So you just got to be licensed with the Department of Real Estate. Now, mind you, I'm in California. There's a handful of states in the US that require a license. Some states don't. So for the licensing piece, you always want to check with the Department of Real Estate in your state. But right here in California and nationwide, as far as it concerns, dealing with homeowners, you definitely need an NMLS license. So I would say that it's a lot easier to get started in lending when you're dealing with commercial lending versus residential lending. There's also a large test that's required here, a national test, for you to get your NMLS license, which is not required when you're working with commercial lending. Moving on to how you actually get paid, right? That's a pretty big one. So number 3, getting paid. When you're doing a residential loan, whether it's an owner-occupied, an investment, a portfolio loan, meaning that it's not, sold to Fannie or Freddie Mac, you're always getting paid at closing. Not before that. That would be illegal. Now, when you're dealing about commercial funding, you can actually collect a processing fee because you're about to take on a large transaction. There's a lot of work that you got to do up front. And if you have a processor, unlike residential, you could actually collect a fee up front as a part of your term sheet because it's a business loan, right? So that's pretty great. If things go sideways in the transaction, which is actually not uncommon, believe it or not, for a couple different reasons, simply because when you're doing a transaction, especially a purchase, and the person doesn't really own the real estate, if everything goes great on the lending side but falls apart on the real estate side, meaning inspections or move out, it just doesn't work out between the buyer and the seller, collecting some kind of a fee, especially a processing fee, really helps at least salvage the time that you put into the transaction. So enough about that. Let's move on to number 4. When you're talking about paying people outside of the transaction, that would be considered illegal on the residential side. But on contrary, on the commercial side, if you wanted to write somebody into your term sheet, like a third-party company that's licensed, or you needed to pay somebody outside of closing because it's a business loan, you could actually do that. I personally only work with licensed brokers nationwide, but you could write them in or outside of the transaction where that would not be legal to do when you're funding a residential deal. All right, so that's another big benefit there. Let's move on to number 5. Most of the business that you do as a residential loan officer is local business. Now, mind you, you could work for a national bank, and that NMLS license may extend it to everywhere the bank works, which could be nationally. But typically, you would find yourself working, just in your local market, whereas being a commercial loan officer, you could actually work with real estate professionals nationwide, even owners nationwide, and you could originate their loans for them, again, with just a real estate license. So that just opens up a very big window of opportunity, being able to work locally versus nationally. Again, that opportunity does exist here, but you do have to extend licenses if you're working at a broker shop into every single state, which is very time consuming and also costs a lot of money to be able to get licensed in every state. All right, it's not very typical. Let's move on to number 6. I want to talk to you about the underwriting piece. Now, what exactly is underwriting? When you're trying to make a credit decision on a file, it's going to have to go through underwriting. And so typically a residential loan is underwritten by the guidelines of Fannie Mae, Freddie Mac, which are basically government-backed agencies, or a portfolio deal, which may be just the guidelines of the bank. In either case, that process tends to get a little bit more complicated than a commercial loan that is basically focused on cash flow from the property and cash flow from the borrower. It tends to be a lot simpler rather than dealing with a residential loan. So it's kind of crazy to think that this commercial sector, even though it seems really like big and scary, is actually a lot more straightforward than underwriting just a regular conventional loan. All right, that's been my experience with most deals. Now, in terms of competition, right? Everything we do, we want to know, is it saturated, is it not saturated? I would say that residential lending is definitely more saturated than commercial lending. And I think that the reason being is, I think that a lot less people understand or want to get involved into commercial lending because it seems like it's a lot more work and it seems a lot more complicated. Which the truth of the matter is, it isn't. It just opens up a lot more opportunity for you, but it's definitely less saturated than residential lending. Let's talk about the business itself. Now, as a residential loan officer, you're actually going straight to consumer, right? You're soliciting straight to consumer, not to third parties. That's not how you typically get your business. You do have referral partners. Okay, let's not mix that up. So as an example, as a residential loan officer, I might get the business from real estate agents, attorneys, CPAs, builders, but typically my service is directly to a consumer, whereas commercial broker or commercial loan officer can actually solicit residential loan officers, because typically residential loan officers don't know how to originate commercial loans, and so that opens up a window of opportunity. And like I said before, you can pay them inside or outside the transaction, right? Licensed broker companies. And so imagine that opens up a whole opportunity for you here nationwide to have a bunch of residential loan officers participate in deals with you that they don't know how to do. So rather than just tell people, yeah, I don't know how to do that, why wouldn't they want to partner up with you and still make a commission? It seems to be a lot easier than constantly trying to solicit consumers, especially in a market where their loan is locked up for 30 years at a 2 to 4% interest rate. When you do in fact get a deal, the deals on the residential side typically are a lot smaller, unless you are one of those agents from the Netflix TV show Selling Sunset. Then you're really dealing into much larger commissions. But what if you wanted to get into those type of commissions without having to sell those crazy big properties? Well, most deal size on the commercial side, or most lenders, most banks will not do a loan less than $1 million on a commercial property. So that means that if you just make 1% on a $1 million loan, right, that would equal a $10,000 commission. Pretty crazy when you compare a very similar effort, if not more of an effort, to do a smaller deal and make lesser commission. All right? And so that was number 9. I'm gonna wrap it up with number 10, which is, where do I get started? So if I wanted to get started on the residential side, I actually posted last year a really great video that you can watch on my channel. It's a full course that would teach you how to get started and actually become a residential loan officer for free. Now, on the commercial side, I'm excited to say that I have just launched the Part-Time Commercial Lender Academy. So if any of this sounds interesting to you, and you might have thought, hey, I kind of want to get involved in commercial lending, but who's going to teach me? I took 10 years of my knowledge and I packaged it in this amazing course that is super easy to follow, just like a roadmap that could lead you from the beginning until the end of the transaction, all forms included, for a very reasonable price, I'm going to add, that you could basically check out in the description below. There's a link, just click on it, check it out if you're interested. It's all there for you, all right? So hopefully this was educational, and if you've enjoyed this video, then please give it a thumbs up. And if you like to see more content like this, then please make sure to subscribe to my channel. If you have any questions, please drop them in the comments below. Otherwise, I really appreciate you watching this video, and I'll catch you on the next one. Take care.